Hey everybody, got some questions out there about labor burden, so I'm just going to hop in here and show you my thoughts on labor burden. So I'm in an example budget. I'm going to come down to field labor. You're going to find the labor burden component of LMN here, and you're going to find it also down in overhead right here. So what is labor burden actually? Labor burden is the amount of money, so the percent increase in someone's hourly wage that covers you as an employer. So when you pay someone an hourly wage of $15 an hour, it costs you more than $15 an hour. And that more is what we're figuring out with labor burden. So the formula for it is workers' comp. Let me put a parenthesis here first. So workers' comp, and you may know that as a percentage already or as a rate per 100 giving you a percentage. So you'll want to use that plus your unemployment rate. And that probably comes in a notification from your state so that you know what rate you're going to be paying the following year. And then you also want to add your employer portion of the taxes. So when you run payroll and you have the employer portion of taxes, which I believe is 7.65 right now, you want to divide that by the total wages. So our goal is to get this in a percent. Sorry, save that. There it is. I was going to say I did do an asterisk here so that it pops it up to the top and I didn't even put it. Okay, so this is what the formula is for your labor burden. I just put this in here as a placeholder for the information up above. The asterisk pops it up to the top for us. You get it in a percent because for every hour of wages that's here, all these straight time, overtime are going to be multiplied out by the average wage with the addition of the bonus to give you the total wages. These total wages are going to add up here. Okay, so if you do need the total wages, you can divide it by the percent, like if you can get an idea for what the total is, and then check it with your previous years. But the burden on top of it really brings your labor to this. So why this is really important here is these hours here are not only figuring your expense for your field labor, they're also figuring out what is available to you as a company to bill out. So when we talk about how much we can bring in, what our capacity is, which you'll see capacity down below in the far left column here, in the analysis, you'll see it talks about capacity in that. What LMN is doing is taking all of these hours that are available to you as a company and assuming you're going to bill them out. So if we include hours in here that we know we're not going to bill out, such as paid time off and so on, it's going to throw it off, maybe just a little bit, right? But you want to get as accurate as you can. So what you can do is leave those paid time off and paid holidays out of this. You can put them over in your overhead so that you're recovering them in the markup portion of your estimates and your billing. So anything that's in overhead is going to be covered by your markup. The important thing is to get it in your budget in the first place, because that means you're going to be recovering those expenses from your customers. Of course, it does make a difference where you put it. The main thing is to get it in there in the first place. So those overtime hours, you want to be really honest with those versus regular. All of them added together are going to present what's available to you as a company in addition to the expense to the company. So why we don't put health insurance in here is a similar reason, but that one's a little easier to remember because this is a percent. So every one of these hours worked, when they go through payroll, this percent gets tacked on top. Medical insurance isn't like that. Medical insurance is a flat fee. So if I pay so much a month for my medical insurance for each of these people, it really doesn't matter how much is in, how many hours are here. It's a flat fixed thing. But if I work more or less time, or if a customer on an estimate uses more or less time, because remember when I get down to the price list in my budget, I'm going to draw on these people that are literally listed here. That customer doesn't necessarily have to pay more for that cost of labor. It might hit them in the overhead markup on that labor, but I just want to clarify that. I hope that helps. Maybe it's a little more convoluted. The basics are, this is the formula. And if you've got things like paid time off, paid holidays that you are offering your employees, you can do the math over here in overhead and say, okay, my expense to the company for those for the year are going to be so much. Same with medical insurance, my expense for the year is going to be so much, and get it in your overhead. Or if you want to work it backwards and have it in your burden, you could do that. The most important thing is to make sure you've got it in here somewhere. That's the most important thing. And that it's in here only once and not duplicated. So 20% is what comes in LMN canned. It does make sense that your overhead is going to be less than your field labor because of that workers' comp component of it. So do kind of a gut check there. Make sure you're updating these anytime your rates change. You're going to want to update them. Okay, I hope that helps.